Hello everyone, I am Aristotle. I am going to present our team topic with my friend Jerry, Accounts and Financial Management, Practical Accounting Problem from Transaction to Trial Balance. In this presentation, I will explain how business transactions are recorded and how they are converted into a trial balance step by step. Before solving the problem, we need to understand some basic accounting concepts. A business transaction is any activity that affects the business financially. A journal is a first book where transactions are recorded. A ledger is used to group similar transactions into separate accounts. A trial balance is prepared to check whether the total debit and total credit are equal. These concepts are foundation of accounting. Now let's look at the rules of debit and credit. There are three types of accounts: personal account, real account and nominal account. Each account has its own debit and credit rule. For example, when we buy furniture using cash, furniture account is debited because furniture comes into the business, and cash account is credited because cash goes out. These rules helps us prepare correct journal entries. This slide shows the business transactions for the month of April. There are 10 transactions such as starting business with cash, purchasing furniture, buying goods, selling goods, paying rent and withdrawing cash. These transactions will be used to prepare the journal, ledger and trial balance. In this slide, we analyze each transaction. For every transaction, we identify which account should be debited and which account should be credited. We also write the reason for selecting those accounts. This analysis helps us prepare the journal entries correctly. Now let us understand the journal entry format. A journal entry contains date, particulars, debit amount, credit amount and narration. For example, when the owner starts the business with 50,000, cash account is debited because cash comes into the business, and capital account is credited because the owner invests money in the business. This slide shows the first part of the journal entry, prepared from the business transactions. Now let me explain each transactions one by one. On April 1st, the owner started the business with 50,000 in cash. So cash account is debited because cash comes into the business, and capital account is credited because it is the owner's investment. On April 2nd, the business purchased furniture for 8,000 in cash. Here furniture account is debited because furniture comes into the business, and cash account is credited because cash goes out. On April 4th, the business purchased goods for 12,000 in cash. So purchases account is debited because go because goods are purchased, and cash account is credited because cash is paid. On April 6th, the business sold goods for 18,000 in cash. In this transaction, cash account is debited because cash is received, and sales account is credited because the business earns revenue. Finally, on April 8th, the business paid 2,000 as of rent. So rent account is debited because rent is an expense, and cash account is credited because cash goes out of the business. All these journal entries follows the double entry system, where every transaction has one debit entry and one credit entry with the same amount. This helps maintain accurate accounting records. This slide shows the second part of the journal entries prepared from the business transactions. Now let me explain each transaction one by one. On April 10th, the business purchased goods on credit from Ravi for 10,000. So purchases account is debited because goods are coming into the business, and Ravi account is credited because he comes our creditor. On April 14th, the business sold goods on credit to Kumar for 15,000. So Kumar account is debited because he has to pay as later, and sales account is credited because the business earned sales revenue. On April 18th, Kumar paid 10,000 in cash. Here, cash account is debited because cash is received, and Kumar account is credited because his outstanding balance is reduced. On April 22nd, the business paid 6,000 to Ravi. So Ravi account is debited because the account we owe him decreases, and cash account is credited because cash goes out of the business. Finally, on April 28th, the owner withdraw 3,000 for personal use. This is called drawings. So drawings account is debited and cash account is credited because cash is withdrawn from the business. All these entries follow the double entry system where every debit has an equal credit. This helps maintain accurate accounting records. After preparing the journal entries, the next step is posting them into the ledger. Each transaction is transferred to its respective account. This helps us find the balance of each account separately.
Hello everyone, I am Jerry Rufus. I am going to continue from ledger. This is the cash account. It records all cash received and cash paid during the April month. We can see the debit side and credit side. Now shall we move on to the debit side. The dates are April 1, April 6 and April 18. Particulars: to capital account the debit amount is 50,000. To sales account the debit amount is 18,000. To Kumar account the debit amount is 10,000. So total amount of debit is 78,000. Now we can see the credit side. The dates are April 2, April 4, April 8, April 22, April 28 and April 30. Now we see the particulars. By furniture account the credited amount is 8,000. By purchases account the credited amount is 12,000. By rent account the credited amount is 2,000. By Ravi's account the credited amount is 6,000. By drawings account the credited amount is 3,000. Now we can carry down the balance. It shows the credited amount as 47,000. So totally 78,000. After recording all the transactions, the closing cash balance is 47,000. So this slide shows the capital account and furniture account. The capital account records the owner's investment in the business. The furniture account records the furniture purchased for the business. Both accounts are balanced at the end of the month. This is the purchases account. It records all goods purchased during the April month. In this example, goods were purchased both by cash and on credit. The total purchase balance is 22,000. This is the sales account. It records all goods sold during the April month. The businesses made both cash sales and credit sales. The total sales amount is 33,000. And this side shows the rent account and Ravi account. The rent account records the shop rent paid by the business, where the Ravi account records credit purchases from Ravi and the amount paid back to him. After balancing the account, the remaining amount payable to Ravi is 4,000. This slide shows the Kumar account and drawings account. The Kumar account records the credit sale made to Kumar and the cash received from him, where the drawings account records the money withdrawn by the owner for personal use. Both accounts are balanced correctly. After balancing all the ledger accounts, we prepare the trial balance. It contains all debit balances and credit balances. In this example, both the debit and credit total are 87,000. This shows that the accounts are mathematically correct. This is trial balance verification. We have to verify the trial balance. The total debit is 87,000 and the total credit is also 87,000. Since both totals are equal, the trial balance agrees. However, it only checks mathematical accuracy and does not guarantee that every accounting error has been removed. It explains the complete accounting cycle in this problem. So the first process starts with business transaction. It contains 10 events. Then it goes to journal, where it records all the chronological works and all the things. then it goes to ledger, and it posts account wise, and then it goes to balancing, where after the balancing the ledger accounts, the trial balance is prepared. This is the complete accounting process. From this problem, we learned the complete accounting process. We understood how to record transactions, prepare journal entries, post them into the ledger, calculate balances, and prepare the trial balance. We also learned the importance of double entry system in accounting. Finally, this is the conclusion. To conclude, accounting follows step-by-step process. Every transaction is recorded using the double entry system. The journal, ledger, and trial balance helps us maintain accurate financial records. In this example, both the debit and credit totals are 87,000, showing that the accounts are balanced. So thank you. Have a nice day.